July's consumer price index showed U.S. inflation continuing to moderate. Monthly prices were up 0.2%. That was in line with June's increase. Headline inflation rose 3.2% over last year. Well, Yahoo Finance's Jared Blikre is here to break down how stocks have been reacting to all this inflation data. Hey, Jared.
Hey, stocks like no surprises. You can see on the left hand of the screen there, all the U.S. indices and also Canada in the green here for about 5 to 0.5% to about 0.7%. Small caps taking up the rear, up about 0.25%. And this is par for the course with the kind of reaction that we've been seeing off the CPI reports this year. Now, I am charting right here, SPY going back, and that's the S&P 500 ETF going back to 2018. That's this light gray line in here. But then the blue line is the stock market reaction in SPY on the days in which we have CPI. I was really surprised to see how much the trends track each other. So you can see going back to 2018, this uptrend matches this uptrend. Then we have a little bit of a retracement. That was actually 20% in the market, so pretty big. We're going up again. We're going down again. Now, when we get to the pandemic, things kind of, I guess I wouldn't say stabilize, but the CPI reaction tends to go sideways in here until we get to the market peak. Now, in 2022, that's when we really started getting hot inflation data that was making which was making Jerome Powell and the Federal Reserve much more reactive and much more hawkish than the market had been pricing in. So not surprisingly, we saw this big downdraft in the market. That was all of last year. And in CPI, we saw it bottom out. But something happened in October with the release of the September data, a huge bullish response there. And the next response in November with the October data was even bigger. So this set us up on the course for this bottom right here being made. That was just a few days after the October release of the September data. So really interesting to see the tight correlation here. If we were to get a surprise to the downside, well, that might indicate a new trend in the S&P 500 as well. So something to think about there. Now, that was kind of the good news. The bad news is I'm seeing a lot of the elements within CPI, especially in energy, they are ticking up again. This is the year-over-year prices in the futures market. And let me just go back here. I want to show you guys another slide. This has to do with the data that we released this morning. Fuel oil on a month-over-month basis, that is up 300 basis points or 3%. On a monthly basis, that is huge. Gasoline, that's up 0.2%, so only 20 basis points, still moving in the wrong direction, which is up. Utilities up 200 basis points. Only electricity moving south in the right direction there. And let's go back to the futures prices because on a year-over-year basis, we're seeing a lot of declines here. Natural gas down 66%, crude oil down materially about 9%, that's CL. From its year-ago price. But you change this over to a 2-month view, you're going to see a reversal. We've seen a lot of these elements pick up. In the upper left, that's heating oil. That's up 34%. Natural gas, 23.8%. Crude oil, 19%. So we're seeing a lot of increases in the monthly numbers here. And so that could mean another reinstallation of an inflation trend to the upside, which is what we don't want to see. So I will be monitoring the energy prices of these inflation reports with a hawk's eye going forward, Rochelle.
We know you will. Thank you for breaking that down for us. Our very own Jared Blikre there.